Welcome back to the deep dive. Today, we're plunging into something, well, pretty rare actually, often misunderstood, but incredibly powerful in finance: market patience. Imagine watching a master hunter, maybe like a tiger, perfectly still, hidden, just observing its prey. It doesn't jump at every little sound, right, or every shadow. It waits, sometimes for hours, maybe even days, for that exact moment, the optimal one. When all the conditions line up and success is, well, almost guaranteed. That's really the kind of patience we're talking about today. It's not passive waiting. It's strategic, disciplined inaction, a bit like those legendary investors, the ones who built fortunes not by trading constantly, but by waiting, sometimes years, decades even, waiting for the right opportunities to fully form and then acting, decisively. So the central theme for our deep dive today, and we're drawing heavily from the craft and market patience, it's pretty clear. In trading, in investing, the really big profits, they don't often come from being constantly busy, that frenetic action. They come from the discipline, sometimes extraordinary discipline, to just wait. We're going to try and uncover why this art of waiting isn't just a nice-to-have virtue, but a critical edge, often totally overlooked.
Yeah, it's fascinating, isn't it? Because our instincts, our human wiring, it pushes us away from this idea so often. The source material really highlights how, our desire for immediate results, for feeling in control, it makes us want to act, even when doing nothing is actually the smarter, more profitable move. We're fighting this action bias that's really deeply ingrained, makes patients feel, well, wrong somehow, counterintuitive.
That's such a great point. It really is a battle against ourselves, isn't it? Okay, so let's unpack this. We'll use the craft of market patience as our guide here. And let's see why doing nothing can feel so hard, but paradoxically might be the most profitable thing you can actually do. Right, let's kick things off by exploring what the source calls the paradox of action. You see it everywhere, don't you? This sort of societal belief that activity equals progress. You must be busy. In the markets, this shows up in really common ways. Traps, really. Things like overtrading, chasing every little signal that pops up, or just getting impatient with setups that are still forming. I mean, be honest, who hasn't felt that little twitch, that urge to just do something to feel, I don't know, productive, like you need to justify being involved in the market at all? It's almost baked into how we think now, right? Activity is good, sitting still means missing out. The book actually puts a great frame on this. It suggests a lot of traders are basically victims of what it calls a hyperactivity bias.
And that's exactly where this paradox really hits hard. The source puts it so clearly. Doing nothing is often the hardest and most profitable decision. Hmm. Now, that's not just a nice saying. It points to a really deep psychological challenge. See, from a brain perspective, we crave control, or at least the feeling of control. So when we're active, placing a trade, clicking buy or sell, we feel like we're influencing things. It scratches that itch. Plus, every trade, even a bad one, can give you this little hit of dopamine, right? That immediate gratification buzz. It happens whether the decision makes sense long-term or not. And the book introduces this really powerful idea of the opportunity cost of action. It argues that every single trade, even a tiny one, it has a hidden cost. It's not just the commission fees. It's your attention, your mental energy, the capital you tie up. Capital that maybe could have been saved for those truly, truly stellar setups. So it reframes doing nothing. It's not being lazy. It's strategic. It's preserving capital, preserving focus.
That reframing in action as strategic preservation, yeah, that's incredibly powerful. It completely changes how you think about sitting on cash, doesn't it? And that leads us right into the next bit: the psychology of waiting.
Mhm.
If being strategically inactive, doing nothing, is so potentially profitable, why is it such an emotional fight? Why is sitting on cash so hard? I mean, seriously, who hasn't felt that knot in their stomach, that fear of missing out, the classic FOMO when it looks like everyone else is making moves, making money, and you're just waiting? That feeling, it can just eat away at your discipline, can't it? Have you ever felt that pull listening right now, that urge to jump into something, anything, just because it felt like you should be busy, just to quiet that noise inside your head?
Oh, absolutely. The source actually describes patience as an emotional muscle. And just like any muscle, if you don't actively work on it, develop it consciously, it just weakens. It atrophies. Most people really struggle here because it goes against our brain's basic reward wiring. We're kind of designed to repeat actions that give us quick, obvious rewards, not the absence of action that might lead to bigger but much later gains. The craft of market patience calls FOMO not just an emotion, but a kind of cognitive illusion of scarcity. Basically, our brain tricks us into seeing a fleeting must-have opportunity where, a lot of the time, there's really just market noise. And this brings up a really critical question, doesn't it? How aware are we really of our own emotional triggers when actual money is involved? The book really pushes journaling as a key tool here. The idea isn't to stop feeling impatient immediately, but to consciously notice it. Observe it. By writing down those feelings, I feel bored, I feel like I'm missing out, I really want to trade something, you create this vital little space, a gap between the impulse and actually clicking the button. That's the proactive first step. That's how you start building that patience muscle. You begin to see through that illusion of scarcity.
Yeah, that idea of creating space, of observing instead of reacting. That feels like the real key, deconstructing that illusion. Because, look, this isn't just abstract theory, right? The craft of market patience really hammers this home with some pretty compelling history lessons, market lessons, stories that show patience paying off big time. What were some examples from the source that really stood out?
Well, mentions quite a few, but maybe two really good ones come to mind. George Soros, for instance. You think about his huge currency plays, like the famous one against the British pound back in '92. That wasn't impulsive, not at all. It came after years of just watching, meticulous observation, deep macro analysis, and then this incredible, almost surgical patience. He waited for very specific, complex conditions to all fall into place perfectly before he made his massive, decisive move. He wasn't trading day-to-day noise. He was hunting these multi-year setups.
Right.
And then you have someone like Warren Buffett. His incredible success is not just about picking good companies, though obviously that's part of it. It's also about this unwavering multi-decade patience, holding on to those investments through thick and thin market crashes, recessions, booms, everything. Think about his Coca-Cola investment. It spanned, what, over 35 years now. He wasn't losing sleep over quarterly earnings reports. He understood the fundamental value of the business itself and just let patience do the heavy lifting, compounding those returns like crazy. And these aren't just lucky one-offs. The book really emphasizes these as like recurring patience patterns you see throughout market history. Sustained observation leads to these rare high-impact actions.
Those are really powerful examples. Soros waiting for the perfect storm, Buffett letting decades work for him. And if you connect that back to the bigger idea, it seems clear that waiting allows you to see things. A clarity that just gets lost when you're rushing around. Constant action just creates all this noise, right? It kind of obscures the real cause and effect, the underlying cycles in the market. By stepping back, by observing patiently, you get this wider view, a panoramic perspective. It lets you start to see the real market matrix, if you like, the actual drivers of value, the big structural shifts, instead of just getting caught up in the daily blips and data points that frankly often don't mean much in the long run. It's about looking past the immediate ups and downs to see what's really driving opportunity over time, and that only comes into focus through that patient, disciplined lens. Okay, so this sounds great in principle, but how do we actually do it? How do we cultivate this rare art of patience in our own approach? The craft market patience gets really practical here, talking about specific tools and rituals. It's not just about gritting your teeth and having willpower. It's more about systematically designing your process, your environment to actually enforce patience. For example, the book talks about creating really rigid, non-negotiable rules. Could you expand on some of those?
Yeah, absolutely. And this is where it gets really actionable, moving beyond just theory. So, for instance, it suggests defining very clearly what an A-plus setup actually means to you, using specific, measurable criteria. Maybe it involves, say, a specific kind of market-wide liquidity event happening, plus a clear price-volume signal in the asset you're watching, and certain sector rotation signs all aligning. You define every single piece. Then the rule becomes absolute. I only trade when all my A-plus criteria are met. No exceptions. It's not flexible. It's a hard stop designed specifically to prevent those impulsive, close-enough trades. And similarly, that journaling we talked about, it's not just passive reflection. It becomes a regular thing you do, a ritual. It holds you accountable. And the prompts the source suggests are very, very concrete, very insightful.
Give us an example, one of those journaling prompts. I think that's, where the rubber meets the road for people listening.
Okay, one of the most powerful ones, and it sounds simple, is asking yourself this before you act. Am I entering this trade because the setup is crystal clear and meets all my A-plus rules, or am I doing it because I'm bored? Just asking that question honestly. It can be a total game changer. It forces you to really examine your motivation. It shifts your mindset from being reactive to being proactive, thoughtful. And the book really stresses that waiting doesn't mean being passive or idle. It outlines ways to turn waiting into active discipline. What does that look like? Well, it includes things like rigorously reviewing your past trades, the good and the bad, to really learn from them. Systematically refining your trading plans, your playbooks, so you're actually more prepared for the next genuine opportunity. And even mentally rehearsing scenarios, playing them out in your head, so that when the market does finally offer up that perfect alignment, that true A-plus setup you've been waiting for, You're not rusty. You're not caught flat-footed. You're primed, ready. You can act decisively, confidently. You've been building mental models, sharpening your tools while you waited.
So, boiling it all down, what does this really mean for you, the listener, trying to navigate the markets? It means that patience, real market patience, isn't just about doing nothing. It's not inaction for inaction's sake. It's about precise, disciplined waiting. It's about having a really clear, well-defined plan for when to act, and just as importantly, when not to. It's truly understanding that the biggest opportunities, the biggest gains, often emerge not from constant frantic activity, but from intelligent observation and strategic patience, from positioning yourself correctly. So as we wrap up this deep dive, let's just circle back to that core message from the craft of market patience. True market patience isn't inaction, it's precision. Precision in waiting for that perfect alignment of factors. It's a craft, really. It's something that needs honing. But once you develop it, through active observation, through disciplined rituals, it can fundamentally change your entire approach. It can turn what feels like a common human weakness, impatience, into potentially your most powerful advantage in the financial world.
Exactly. And that whole transformation, it really starts with just becoming more self-aware, more conscious of your own impulses. So maybe if you think about all this, consider this final journaling prompt from the source material tonight. It's a bit provocative. What am I currently waiting for in the markets right now, and how, specifically, will I know when that wait is truly over? What precise signal tells me it's time for decisive action? It kind of forces you to define your conditions, doesn't it? Turns passive waiting into something much more active analysis.
That is a powerful question to sit with, isn't it? Hopefully this deep dive has given you a fresh perspective, maybe highlighted a rare skill that's really essential to cultivate if you want an edge. Keep asking those questions, keep digging into what really works in markets, and keep refining your own craft. We'll catch you on the next deep dive.